A very good evening to all my subscribers. My name is Rain, founder of Forex 100 Academy Private Limited. Alright, so today the trade ideas, the currency we are looking at will be Australian USD, Aussie dollar. So take a look at Australian dollar. Is it much more a bullish or bearish trend? Take a moment to think. Alright, so whatever your answer is, I won't give you a definite right for your answer or wrong for your answer, unless you have a way to justify your finding. Okay, so my take for Australian dollar, it is more towards a bearish move. I am looking for opportunity to sell this currency. Alright, so there are a couple of things that I can share with you. What are the areas that we see that the market is bearish, okay, rather than bullish? First of all, let me just bring up my tool. This line is the major resistance of Australian dollar. Alright, so you can see that there are a couple of tests over here. Market came close but failed to break above this price. So this could be a reference for you if you want to place your stop loss. You can put X number of pips above this high shadow over here. So for Australian dollar, typically you can put around 20 pips above. If you are very tight on your stop loss, you can choose to put 10. Your personal preference, backtest the result. Alright, okay, so this is the first clue that we see that market is bearish then bullish. Second clue, what can we see? Alright, market has pushed downwards below this 200 moving average. Alright, and of course you can definitely say that market went higher, but look at this part, it create a new low. Alright, this is the second clue I am referring to, this area. Alright, and of course market went up, test it again, came back down. Alright, followed by the third clue, market hit the resistance, came down, break structure low over here and close below, went lower, went back up, retest, reversal candle happened. So what is my trade plan? Take a look at this. Let me pull out my Fibonacci tool. Low to high. What do I see? A 38.2 support standing on strong. Market did not came down and close below that, and this is a daily chart, which means that each candlestick is 10 minutes. I am awaiting for market to went back up again and do not close higher than this high price over here. Okay, so I'm going to short at this region over here. Let me just mark it up for you. This is my region for me to look for a shorting opportunity, and I am looking with the criteria of that. This is my double top setup. Okay, so by reaching at this price, I'm waiting for a reversal candle, a closing candle to confirm the market is moving downwards. A confirmation typically needs to close, that means a bearish candle within the two candles, you have to close at least 60% of the previous bullish candle. Alright, or rather the candle before the reversal candle. We have a special class of reversal candle criteria in our class. Alright, so if you're interested to find out more, you can private message me. So when there is a reversal setup over here after the bearish candle confirmation, I'm looking for a aggressive short, and I'll call it a probable double top setup. Alright, so this will be the move that I will be engaging way before all counter trend trader. Alright, but the criteria is that I have to make sure that there is a sign of weakness, the first sign of weakness, before I engage the trade. Now, where is my stop loss? Recently, I've been working on a pretty tight stop, and it has been some time. Results has been pretty good. Now, why would a tight stop be an advantage, people? First of all, when you have a tight stop loss, you have a lesser in terms of number of pips of risk for your trade. Some of my students will be using dollar and cents. That means they will decide how much they are risking and use a calculation to choose what is the contract size or the trading size they are going to engage. That is one way, but that will definitely affect your contract size. Meaning to say that instead of, we take for example of a 50 pips stop loss, if you are trading a standard contract of 50 pips, when you hit your stop loss, the losses will be 500 USD. However, if you choose to scale down your risk to only $50 with the same amount of stop loss, you can't trade a standard contract. You only can trade 0.1 of a standard contract, which means when you profit 100 pips, instead of standard contract of $1,000 profit, you will only profit $100. Don't get me wrong, that is fine, but what if we can tighten the stop loss even further? Alright, and we get only stop out when the market change, but of course compared to the usual way that I'm doing is 20 pips above the recent high that is near the resistance. I put 20 pips above. The advantage is chances of me getting stop out is lesser, way lesser, but the disadvantage, my initial stop loss will be a bit greater than other trader. Alright, so I will be using this as the high price, recent high, as I take reference, as this is the first sign of break of support. Alright, this is my support line. Okay, so take a moment to digest. Alright, so once I've identified this is the initial leg of break of support, I'll take this as an immediate reference. I'll put my stop loss 10 pips above this price, and typically I will add around 3 more pips. Can anyone of you tell me why? Why do that? Alright, so I put around 30. Okay, you can say that it is a habit. You can say that because I have included the spread. Yes, that's correct. I've included the spread possibility of around 3 pips, and we all know that spread does fluctuate. So I have a habit of just adding a bit more, and this is what you do, guys. When you find or analyze a trade itself, you have to ask yourself, where is your stop loss, where is your take profit level for you to consider before you engage the trade. So this area is the initial stop loss that I have marked out. Alright, and I have couple of targets I am looking at. The first level definitely is this 38.2 range, where typically I would not exit the trade over here. The most I'll be doing will be a partial profit. Alright, this is my target 1, and for this trade, my final target for this trade will be this level over here. Alright, this will be the range I'm looking at. Okay, and if you see, let us compare. This is the initial stop loss. Alright, for target 1 is around 1:1, so it's pretty normal. And of course, when we approach target 2 as our true take profit level, we have a pretty good reward is to risk ratio profile. There are 3 blocks right now, so it's slightly more than 3:1. Alright, so for my student, some of you might be using it 3:1 is better, 2:1 is your best of the best trade. For this, I will not see it that way. It's pretty technical for this trade setup itself, but in fact it is quite a good trade, truth to be told. Alright, so that's all I have for you today. If you have not seen this video real time, you did not receive the alert price, chances are you are not my subscriber. Subscribe to us for the first month, only $10. We have a target to produce 3 of such video every week for all of our subscriber, and from time to time, starting from today, I will be starting to film live streaming video, not so much on trading, but more towards a discussion, interaction with existing trader, some of the trading habits, some of the things that you should be looking at. And the platform I will be using will be Periscope. After much consideration across all other platforms, I have decided to use Periscope, and we will see how it goes. Just follow me on Periscope at RaynLim TV, RaynLim TV. Alright, so if you like to follow me on Twitter, that will be RaynLim itself. Alright, so that's all I have for you today. All the best, and wishing everyone many pips in return. Goodbye for now.